Hello, hello, hello. Welcome to everyone watching this live. Yeah, all those who are watching us, I kind of request you to join the live. Today is going to be an enlightening live. Yes, I have with me Mr. Chinmay Ananda, who is going to be our mentor for today's live. Sir, a warm welcome to you.
Thank you, Akshay. Thank you for having me.
Yeah, before we can proceed, I just like to talk about sir and all the achievements that he's done. He's trained over 2,500 business owners and over 10,000 students across the globe. He has developed programs for MBA students in Australia and teaches the same at Royal Melbourne Institute of Technology, Dushier School of Business, Insight Academy of Entrepreneurship. He has authored books related to finance and is a popular face in the global finance scene. So this is just a tip of the iceberg. As a personality, Mr. Chinmay Ananda is a lot more. Sir, a warm welcome to you for our live today.
Thank you once again, Akshay. Thank you for your warm words and welcome.
Right. So today's session is all about business finances, right? So all of us will want to start something or the other on our own. We'll want to have our own enterprise,
Hmm.
when we're 35, 40, 26, 27. But before we start, we ignore the very important information or the very important fact of business finances. So to begin with, what are business finances? I'd like to know from your perspective.
Okay, so there are two words here, right? Business and finance. To start any
Right.
business, which means when we want to sell something, whether it is a product or a service, or it can be both product and service, we need money.
Right.
To start a business, to grow a business, to expand a business, we need money. We need funds. So, which means we need financing to be done to the business at different stage. Now, it's not a
Right.
one-off thing; it's a regular, ongoing thing. So, business finance
Correct.
is all about where are we going to get the funds from whom, at
Mhm.
what time, at what interest rate and conditions, and so on and so forth. And to make sure business is running smoothly, how can we be proactive so that we don't get into cash flow issues? So all of this, I'm just giving you an outline and overview. All of this will come into business finance.
Right. So, how does someone finance their businesses? Considering the fact that a lot of us think that getting money from someone else is very easy after the advent of Shark Tank in India, and many enterprise entrepreneurs just go to Shark Tank and think they can easily get finances. So, how can someone actually crack it
Okay, so well,
from a
first answer
30%
your
perspective?
first question, which is about
Yes, please.
where to get the funds from.
Yeah.
Broadly speaking, whenever business
Yes.
needs money, it borrows from two types of people. Two types. One, we call them
Hmm.
insiders, and second type, we call them outsiders. The difference is insiders are
Okay.
people who give money to the business and they will take a share in the business. So it starts from the business owner, business partners, the investors, the shareholders, the family friends. No, people who have given money and they expect the share in the company. We call them insiders. Whereas outsiders are
Right.
predominantly financial institution like a bank, and they give money in form of
Hmm.
loans. They don't ask for any share in the company, but they will ask a fixed or sometimes that varying interest rate depending on how the business owner has negotiated. Now, the difference between
Right.
insiders and outsiders is outsiders, they don't want share in the company, but they want that principal and interest to be paid back to them come what may. Even if the business fails or if it is making a loss, they will make sure they will somehow collect their money,
Right.
or they will come after the property or whatever asset the business owner might have pledged. Insiders, they give
Right.
money, they invest money, they expect the share in the company. If business makes a loss, well, they say it's a loss, it's a bad investment. But if it makes profit, they expect the equal share in that profit that has been made. So broadly, money comes from insiders and outsiders. Now, to answer your question, especially after Shark Tank, yes, now I'm part of many business plan competition. I'm part of FKCCI month-end competition. So we receive hundreds of applications where they are sending us business plan to say that, hey, here is my business plan, and they try to pitch their business plan, and of course, the prize money will run in lakhs. The very first question I ask them is, imagine when you were 6-year-old boy or girl, And then you ask your parent, your father or your mother, Appa, Amma, can you give me 10 rupees?
Sir, can you hear me? Your end of the live has been paused. Hello. Okay, I'll be adding Sir again. So for those who are watching the live, if you want to ask any questions about how you can manage your business finances before even starting one, this would be the right time. Yes. I'm trying to add Sir again. There's some technical issue on the other side. Okay, well, we'll try to connect with Mr. Chinmay Ananda again, but then business finances, right? It's a very wide topic, and we have a lot of courses on our app, and we also have content on our YouTube channel. You can go check that out. In the
Akshay?
meantime, I'll add Mr. Ananda. Yes, it got cut. Yes, yes, please continue, sir.
Okay, sorry for that. I'm not sure. For some reason, the modem Wi-Fi switched. I hope
That's
you
okay.
can hear me. I'm audible. Now, can you please
That's okay.
tell
We
me
can
where
continue from
the video got cut, Akshay?
we stopped when you were explaining about Shark Tank and
Okay,
being a part
great.
of
Thank you. So let me
investments.
continue
Yes.
from that. So after the Shark Tank episode, many people they approach
Yeah,
us
yeah.
for investment. Now we actively invest in startups. We invest in seed stage and pre-series A. So very first question I asked out, asking your parent, your father or your mother, saying, Appa, Amma, can I get 10 rupees? Now, what is that immediate question any parent will ask? Why do you want 10 rupees?
Why? Exactly.
So let's say they say, oh, I want it because I want to buy a cricket ball. Okay, here is 10 rupees. Because it's summer, they want to play cricket and they might give. Now, if they ask, I want 50 rupees, the parent will definitely ask, why? What will you do? Oh, I want to buy a pencil box. Again, if they ask, I want 500 rupees, the parent will ask again, why? What will you do? What will you buy? Oh, I want to buy a textbook. The parent will say, okay, once you buy the textbook, come and show me and give me the receipt. If the same child is asking for 50,000 rupees or 1 lakh, do you think the parent is going to give them? They will say, okay, tell me where you are going to spend. I'll only come and I'll only make the payment. The more money the
Yes.
child is going to ask, more question the parent is going to ask. Even though it is their own daughter or son, it's not about the trust. It's about can they really handle that amount of money. Now, when startups or new entrepreneurs they want to start their own business and they're asking for finance, asking for funding, either from a bank or from an investor, I want 5 lakhs or 5 crores, whatever that number is. Don't you think an investor will definitely ask why you want it, where will you be spending, what will you be doing it, will you be able to handle it, will you be able to run a successful business and generate profit, return, and also give us? So there's so many questions that they want answers for. And this is where again business finance
Yes.
becomes a very critical thing, because finance is the root of how business makes money, and language of business is numbers.
Right. Right, sir. Right. This actually put light on a lot of questions that I had personally. Right. So yes, we know that an investor would obviously ask about where I'm going to spend the money that he's going to invest in. Suppose I get an X amount from an investor. So what should I actually do? What are the action steps that an entrepreneur should take after getting investment?
In the very first place, the entrepreneur should know where they will be spending even before they borrow the money. So there is something called as capital budgeting. So which means how much capital, which means how much money are you going to take, how are you going to budget it, and how are you going to efficiently manage it? Because actually, many people ask me, Chinmay, should I borrow more money from the bank or should I borrow less money from the bank? Should I take more money from the investor or should I take less money from the investor? And I tell them, no, it is like asking, is it good to have high blood pressure or low blood pressure? Is it good to have high sugar
Hmm.
level or low sugar level? It should always be
Right.
balanced. Because actually, what happens is when we have less, obviously it will result in shortage. But when we have more, it becomes
Exactly.
worse. And many people don't realize this. Having more than what is necessary is a worse situation simply because most of the time we will spend that money on something that is unnecessary. Maybe let me give this example,
Exactly.
Akshay. I've also mentioned the upcoming course that we have developed for Freedom Map. I mentioned this in one of the modules.
Yes, please.
I tell people, try this for yourself, just
Right.
to understand your spending habit and your relationship with money. Keep your wallet, purse, your credit cards, debit card, whatever, even your mobile phone, because you will have all the payment gateways, everything. No, keep it at home. Just take 100 rupees, just 100 rupees, put it in your pocket, nothing else with you, 100 rupees, and go to a market nearby or a shopping mall nearby. Just roam around for half an hour or 1 hour. Come back home. Now take 500 rupees and put it in your pocket. Again, just casually go to the market or shopping mall, roam around, come back. Now take 2000 rupees. I hope that it is still in circulation. Put it in your pocket, go to the shopping mall or a
Right.
market, roam around, come back. Now take a paper and a pen, write 100 rupees, and try to recollect all the items or products that you saw when you had 100 rupees in your pocket. Write 500 rupees and try to remember all the products that you saw or items that you saw when you had 500 rupees in your pocket. Same thing with 2000 rupees. Akshay, I have tried this, I have made people do this, and most of them said, Chinmay, when I have $100 or 100 rupees in my pocket, I could see only products that are worth 100 rupees. When I had 2000, it was 2000.
Right.
So, this is where the mind goes about opening the possibility it might have with that kind of an amount it might have in the pocket. So when it comes to funding, when I take more than that is necessary, rather than running a office, probably in a small office at this particular, because I'm a startup now, I want to make sure I will save each and
Right.
every rupee. So probably I want a 10 seater. I just want few employees and few machines and things like that to run. But if I've got more money, suddenly I'm like, oh, let me go to a bigger office, a bigger space where they have
Exactly.
got air conditioning, and let me spend so much on that. So this is where an entrepreneur, even before taking the money, should know where they'll be spending on what, and most importantly, how will that money that they are going to invest in something is going to bring back a return. So I'll just share one more thing, and I will ask you, or you can ask me the next question, Akshay,
Right.
because when I keep speaking at many management schools, and there was this particular student recently, when I was in Sydney a few weeks back, he asked me this question. He said, Mr. Chinmay, you said you have got more than 10 years of experience educating people on the subject finance, and I know it's a very vast subject. In the last 10 years of you educating, can you tell me what is that one thing that you have learned, and what is that one thing that you want us to learn from your experience when it comes to business finance management? Now, imagine Akshay, he wants me to tell whatever I have understood from my mentors, all the books that I have read, and two books that I have written, videos I have watched, I have prepared, everything. He wants me to squeeze it and just tell him in one sentence. But
Right.
anyway, these days, that is how the students are. They're very demanding and challenging. Fortunately, because I've already authored two books and I regularly write articles and make videos like that, I had thought about it. And I said, if there is one thing that I would like you to remember for the rest of your life is, next time when you are about to spend money, or in other words, next time when money is about to go out of your pocket or from your bank account, ask yourself this one question: what will happen with this money, and what kind of return it might bring me back? Because, Akshay, broadly speaking, this is what happens. Let's say here we have the money,
Right.
whether it is 100 rupees or 1000 rupees or whatever it is. When money goes out, two things will happen. Either it becomes an expense. From business perspective, I pay rent, it's an expense. I pay
Mm-hmm.
salary, it's an expense. I pay all the utility bills, electricity bills, gas bills, whatever it is, expense. Or the money will be spent towards an asset. I purchase a land,
Is it?
I purchase machinery. Now, looking from personal finance perspective, I go outside for some entertainment. I watch a movie, I watch a RCB match, I eat, I buy a gift, expense, expense, expense. Now, I buy a land, a property, I invest somewhere, it becomes an asset. Now, again, in asset, it becomes two things: performing asset and non performing asset, or sometimes even
Yes.
non essential asset. I buy a bike, it's not performing asset. It is not going to give me any return unless I work for Rapido, and it is now I work as a taxi driver or something. So it becomes a
Yeah, yeah.
non-performing. So simple. When money is going out, either is it becoming an expense or an asset? If it is an asset, is it going to be a performing asset? Because mainly it is a performing asset that is going to give us some return. So I hope that I have answered your question when it comes to how much should they borrow or where they should spend. I would put the question back to them. It's a question that you should be asking even before you borrow the money.
Yes, very well articulated, sir. My final question would be, we've got the investment, we've invested in the right places, preferably assets, considering that after watching our courses and after doing your own research, that you've gotten to a point where you understand what an asset and an expense is and where you have to spend.
Mhm.
Even after all that, you're losing out on some money. You're having losses, right? So how do you manage these losses? How do you do risk management? Is my final question.
Okay. See, in the first place, when we immediately start the business, we cannot make profit to a great extent. Again, it depends on the business model. Some businesses might be making loss for a few months until they hit the break even. Some of them might be making for a few years.
Break even,
Now, you
yes.
might have heard many startups who have become unicorns and still they're making losses. But investors are investing
Yes.
crores and crores, not few, no, 1 or 2 crores. It's like hundreds and thousands of crores. First thing is it depends on the business model. Whether are we going to run the business where we are going to burn cash so that for a period of time when we are going to really acquire the market share. Like for example, YouTube, when it was purchased or bought out by Google in 2009, which is what, 14 years back. So 14 years back, Google purchased, bought out YouTube for $1 billion when YouTube was not even making $1 in revenue. Forget profit. Actually, it was not even making revenue.
Right.
They purchased for one
Exactly.
billion, and today YouTube every week they make $1 billion in revenue. So loss, if it is part of a business plan, and we know that we are going to make a loss for probably few months or few years, whatever it is, then we need to have plan B. How am I going to survive until we kind of capture the market? In spite of all the planning we have done, still
Right.
if the business is making a loss, then somewhere I'm afraid the business plan or what we kind of assume to a great extent didn't go according to plan, and this is where we need to have plan B and plan C in the pipeline. Simple example, Akshay, yesterday and day before we had Modi ji here in India. So if now I live in
Mm-hmm.
Basveshwar and if I had to travel to the other side, let's say Jayanagar or JP Nagar, so there was this route, and police or the wherever no department had mentioned, no, this is where the roads will get blocked. So I want to go from here to there, and this is my usual
Right.
route. Because there is going to be some kind of a roadblock that might happen of the VIP movement, I had to choose another route.
Right.
And of course, I got stuck while coming back home for half an hour, but it was all right. It was not like I was stuck for hours together. So, same thing we are doing in
Yeah.
business, Akshay. I'm here, I want to go there. I'm starting my business 1 year from now. I want my business to be either profitable or we hit that break even point. Or I'm already making a business of 1 crore, I want to make 5 crore. The question is, how will I reach there? We'll have some plan. Definitely, whatever we have planned will not go exactly as we planned. In that
Right.
scenario, when we realize that, hey, you know what, there might be a loss that I might be making if I do all of this, then what is my plan B and plan C? Rather than taking that usual route, the main outer ring road or the main road, can I take some side road? So, similarly, in business, What is that plan B and plan C? And that is what many businesses had to do during COVID. When shutdown happened, lockdown happened, they had to figure out how am I going to make up for it. So to quickly, summarize my answer, Akshay, if business is heading towards a loss, if it is not part of the business plan or something that we anticipated, then it is immediately time to come back, sit, figure out what is that we can do, how to minimize those things. And this is where it becomes matter of survival. It's like test cricket. In test cricket, you enter the play field with two kinds of attitude. One, come what may, I'm going to win this test match, or come what may, let me just survive this innings. Let us go and make a draw. Let us not lose. So depending on the situation, again, the business has to choose. Now, are we going to go make sure we're going to make profit, or let us make sure we are not making a loss?
Amazing, sir. I especially loved your examples, the Modi ji example and the test example which you gave, which I felt I could relate to very easily. So finally, sir, if our audience watching the live now or anyone who watches the live later, if they want to connect with you, how can they do that?
But LinkedIn would be a better place to have professional conversation. Or they can visit
Right.
my website, chinmayananda.com. I'm sure on Freedom app, we are about to launch the English and the Kannada version of the course that we
Mhm.
have recorded. So even there, they can
Right.
get in touch with me.
Right, sir. Thank you so much for taking time on May Day, a holiday, and coming and joining us on the live and sharing your insights on how you can manage your business finances. Hope to meet you soon again. And for those who are watching and who are going to watch the live later, you can find courses by Mr. Chinmay Ananda, which are going to be released soon on the Freedom app. So have a nice day, sir. Thank you so much for spending your time with us. Thank you.
Thank you. Thank you, Akshay. Thank you, Freedom app,
Yes.
for having me. Have a nice evening. Bye.
Thank you. Thank you, sir. Thank you.